Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 29th of November 2020, and we were going to publish episode 3 of our Peak Silver series. However, following on from our weekly update published yesterday, and we include a link below, we wanted to add some further information which may prove pertinent for traders over the next week or so, and investors of course. And so we shall publish the Peak Silver video tomorrow, but for now, we'll take a look at this additional information. Okay, now first of all, we wish to look at an article published by Reuters yesterday. Reuters article dated November 27th, 2020. Headline: Gold dives below $1,800 on optimism for economic recovery. Gold set for biggest weekly decline since end of September. Gold has declined nearly $300 an ounce from record high hit in August. Silver hits 2-month low, on track for 6% weekly fall. Gold slumped 2%, breaking below the key $1,800 support level to a near 5-month trough on Friday, as growing optimism about a quick vaccine-fueled economic recovery and a smooth White House transition powered US equities to records. Spot gold slid 1.3% to $1,787 an ounce by 1:15 p.m. EST, earlier falling to its lowest since July the 6th at $1,773 an ounce. The metal has shed about 4.5% so far this week, the most since the week of September 25th. US gold futures settled down 1.3% at $1,781.90 per ounce. Quote, as soon as prices touched below the key 1800 level, it triggered a sell-off. It is probable that prices might test the 1750 level, given we have a strong fundamental reason like the vaccine, unquote, said Oanda analyst Craig Earlham. Further weighing on gold, US equities raced to a record on the vaccine optimism and, as investors bet on calmer global trade under a Joe Biden administration in the United States. Quote, it is believed that Biden will take a calmer approach towards trade with other countries like China, and that is getting reflected in the stock market, unquote, said Natixis analyst Bernard Dada. US President Donald Trump said on Thursday that if the Electoral College votes for Biden, he will leave the White House, paving the way for Biden to formally take up the presidency. However, with ultra-low interest rates and prospects of more stimulus in the economy, gold looks robust in the longer term, Dada said. The economic impact of the COVID-19 pandemic has led global central banks to keep interest rates at a minimum. Along with that, massive amounts of stimulus into the economy has raised concerns of a higher inflation, helping gold gain more than 17% so far this year. In other metals, silver dropped 3.5% to $22.63 per ounce and has fallen 6.4% so far this week. Platinum rose 0.2% to $963.45 and palladium gained 1.6% to $2,420.18. End of article. Now, as we can see from this article, much of this has confirmed broadly what we issued in our weekly update. What also drew our attention yesterday, though, was a further article published by Kitco News, which was published on the 27th, late on Friday, which more or less indicated that $2,000 gold in 2020 is now very unlikely, and that we may even see prices fall below $1,700 before the year is out. Gold and silver trading with a gold to silver ratio more recently in the late 70s. then if they are right on gold, we could very well see silver continue to trade in the very early $20, and therefore a very limited prospect exists for $30 silver before the year is out. So let's go over to the Kitco article and take a look at what it has to say. Kitco news article, headline, can gold price fall below $1,700 before sell-off is over? Markets eye COVID restrictions stimulus. Dated November 27th. Gold is down for the third week in a row, but does this mean the bull market is over? Some analysts are beginning to reverse their expectations of $2,000 gold by the end of the year. Thin holiday trading and stop losses have contributed to gold's move below $1,800 an ounce on Friday. And even though analysts remain certain that the macro environment is still very supportive of higher gold, some are starting to postpone expectations of new record high prices until next year. Quote, I disagree with the premise that gold was rallying because of the pandemic. I think gold was rallying because of the response to the pandemic. The stimulus package, the devaluation of the US dollar, low interest rates, those are the reasons why gold rallied to new record highs. I don't think any of those reasons have dissipated, unquote. Phoenix Futures and Options LLC President Kevin Grady told Kitco News. However, Grady no longer expects $2,000 gold by the end of the year, estimating the precious metal to wrap up 2020 below $1,900 an ounce. The drivers that pushed gold to new highs back in August are still very much there, said TD Securities commodity strategist Daniel Garley. One way to look at this is to see what drives people to buy or sell gold. When we break that down, it comes down to factors that we can actually see in real time. Things like the US dollar, real rates, nominal rates, etc., Garley said. The price action in gold right now is entirely inconsistent with what's going on in those other markets. What that tells us is that it is overwhelmingly driven by positioning changes. Most likely what has happened is that gold prices have breached some threshold that was essentially maximum pain that some market participants could withstand. Analysts did warn investors last week to expect higher volatility due to thin holiday trading, and this is what the gold market saw. At the time of writing, December gold futures were trading at $1,782, down 1.26% on the day. This week saw a rollover period. Wednesday was the last day of index roll, meaning that it was the last day for anyone who has long December contracts to either liquidate those positions or roll those positions. This is what happened with the sell-off at the beginning of the week. It gave people a chance to get out of the trade and re-evaluate, Grady said. Traders who got in late and were chasing the market higher are the ones getting out now, said Walsh Trading co-director Sean Lusk. What we are seeing here is those who got long last going out first, which means the public who probably chased this thing from $1920. The formation was pretty steep, so the break was to be severe, Lusk said. Also, a lot of attention is being taken up by the crypto space, and it's been hurting gold as well, Grady added. Some money came out of precious and went into crypto, he said. Lusk also noted that a lot of people are starting to favour crypto versus gold. But at the end of the day, what would you rather have, an ounce of gold in your hand or something on the screen, he asked. In the next few weeks leading up to the Christmas holidays, the market's attention will shift to how severe the COVID-19 restrictions will be, whether there will be any more stimulus this year, and what more can the Federal Reserve do to help, according to analysts. Market sentiment will be more likely influenced by news on the timing of a vaccine and concerns about a near-term intensification of COVID containment measures in the wake of Thanksgiving gatherings, said ING chief international economist James Knightley. The number of cases was rising sharply before last week, but holiday travel and socializing could see an acceleration that necessitates aggressive action to prevent healthcare systems buckling under the pressure of hospitalizations. These new restrictions could harm the economic recovery, which is far from stable, Knightley said. Already we can see the jobs market is suffering as curfews and restrictions kick in across more parts of the United States. Markets are still likely to see problems with getting the COVID-19 vaccines out while the second wave persists, added Lusk. There is some real potential that this could still hamper the recovery in equities outside of the political situation, he noted. With no stimulus yet in sight, the big question for gold is whether or not the market can count on the Fed to do more in December, said Galley. More specifically, the change in weighted average maturity that some part of the market expects. That was the focus of the Fed minutes and will likely be the focus of the mid-December FOMC meeting. That's ultimately what will determine whether or now gold prices will resume their upward trajectory in the near future, he noted. What's next? In terms of how to trade gold from here, Grady said keep an eye on 1851 as the upside level and then sell that level the first time gold reaches it. This was our old low that we broke down, he said. Lusk, on the other hand, is not ruling out more losses next week before gold begins to recover. If this market can push down another $60 to $70 lower, we could see a move below 1700 before this is over with, he said. After that, Lusk projects for gold to begin to climb into 2021, noting that the end of December and beginning of January are seasonally good times for gold. That was something we stated yesterday in our update. We'll go from München to Yellen, which is right out of the Bernanke school of quantitative easing and money printing. You can look for continued dips to get bought, he said. Seasonally, as we get into November through mid-December, we see a seasonal weakness. The market was overdue here. I am looking for support levels to hold and then buy into 2021. Data to watch. Next week's data slate's a full one, including the key US non-farm employment figures from November, scheduled for Friday. There's also the PCE price index and pending home sales on Monday, ISM manufacturing PMI on Tuesday, ADP non-farm employment and factory orders on Wednesday, and ISM non-manufacturing PMI and jobless claims Thursday. End of article. So, for some, a rather pessimistic, but in our view, realistic outlook for the direction of gold and by consequence silver over the next few weeks. Now, for those who are still interested in buying gold and silver, you may find this a good opportunity to do so, taking into account that most advisors and analysts are expecting a pickup in precious metal prices in 2021 and certainly into 2022. Now, the one caveat we have, of course, is if there is further friction in the Middle East or some unforeseen geopolitical action is taken, which could, as we say in the UK, disrupt the apple cart or upset the apple cart, then we will see much higher gold and silver prices. But that aside, the trend is either down or consolidation close to current levels. Now, we hope this has been useful. We wanted to get it out to you as quickly as possible, and we will resume our Peak Silver series tomorrow. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. And we also yesterday published a video on the Richard and Greg channel concerning the meaning of Black Friday. You don't see many videos about that on YouTube. Thank you once again. Until tomorrow. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.